you need to companies need to have this compliance program or have visibility into their data almost at their fingertips. So those are the things that get me excited and rather fired up.
That was Vince Walden, CEO of Kona AI. This is Tom Fox. Welcome to the award-winning Data-Driven Compliance. In this podcast, we will discuss how to use data to improve and enhance the effectiveness of your compliance program, creating greater business efficiency, all leading to more return on investment for your compliance program. Join host Tom Fox as he explores how data will drive your compliance program to the next level. This podcast is sponsored by Kona AI, and now a word about Kona AI. Kona AI is the leading AI-driven solution for anti-corruption, risk, and compliance professionals. Our easy-to-use software and flexible, secure deployment models drive fact-based decisions that focus on the risk areas that matter to the regulators and your business. Whether you are looking for a solution that sits in the cloud or on premises, Kona AI returns lost money to your company's balance sheet and spots high-risk payments to third parties in half the time and half the cost. Conduct better evidence-based risk assessment. Reduce investigations costs. Enable your compliance team to present risk in a timely, data-driven, fact-based manner. Register for your free demo at konaai.com or email info@konaai.com. In this episode, I welcome back Vince Walden, founder and CEO at Kona AI, and we take a deep dive into the Philips FCPA enforcement action and use AI to demonstrate how it could have been prevented or detected by Philips. Another edition of the award-winning Data-Driven Compliance. I'm thrilled to have back with me Vince Walden. Vince, welcome back.
Thanks, Tom. I'm glad to be here.
Vince, we're going to take things in a little bit different direction today because I asked you if you could review a recent, fairly significant FCPA enforcement action and see if a data analytics / Kona AI approach would have helped or could help uncover or detect the impact of the bribes paid. So you were kind enough to accept this invitation and read the underlying materials and come on. So did your homework. And this, of course, is the Philips FCPA enforcement action, which involved distributors. And I think most people understand that if you have a commission sales agent or reseller that's more of a direct relationship, perhaps you can use a basic data analytics program, but people perhaps don't understand the concept with distributors. So could you maybe take it from there and explain how a data analytics program such as Kona AI would work with distributors?
Yeah, and I hate to play Monday morning quarterback on this because I'm sure there are situations, et cetera, that might have also been played. So take that with a grain of salt. But boy, when I read the settlement agreement and what happened there, that the issues that were happening, primary bribe scheme was that they were using discounts, giving discounts on the products, which would free up money to pay bribes. And when I look at, the most simplest of all tests when you're looking at your distributors, which again, for many companies that go through distributors, those are just customers, but they're middle customers because then you sell to the distributor and then the distributor sells to the end user. But when you can just do a simple margin analysis, when you look at margins of your sales to the distributor and you look at free goods as a percentage of sales or free goods, discounts, returns type things as a percentage of sales, just those basic type of analytics could have really, I don't want to say easily, but easily spotted these issues. Now, in reading the settlement agreement too, in addition, now they had some internal controls issues and segregation of duties issues because these discounts in theory, which actually it said were up to 6 to 8% of the sales contract, which was high, those should have been escalated. And that should have shown up on some radar and they weren't. And I think they fixed as part of the remediation activities that mentioned that they were improving their internal controls around that. When you're giving away excessive discounts, that needs to go through some escalation process and there needs to be more eyes on it. But as a compliance professional or even internal audit professional, when you're looking at some of these analytics, they would have easily spotted. what I was curious on is I went back and looked at my platform in Kona AI to say, let me show you some examples of what tests might even look like. So I'm excited to maybe even show you some ideas and show you what that would be.
I'm going to bring your screen up, Vince, and if you could walk us through some of these, that'd be great.
Okay. Yeah, that's funny. But I think about the disclaimer. The SEC, the alleged bribes happened, or the issues happened between 2014 and 2019. Now, Kona AI existed back in 2020. And it's funny, at the time in 2014 and 19, that's actually when I was helping Matt Galvin build the BrewRight platform at AB InBev. And for those that know that story, that was a multi-million-dollar endeavor. And back then, it was perhaps cost prohibitive to do these types of tests. But now, gosh, for less than 150, 200K a year, you could do these types of tests. So it's really, in fact, many times for the kind of analytics that I'm describing, you could do these on your own in Excel. So really, there's not really much of an excuse to not be doing these types of tests, especially if you're in a distributor model, but even in a customer model. So what I'm doing in our Kona module, in our Kona AI example, we look at employees, vendors, and customers. So in this distributor example, I'm going to focus in on the customer. We call it customer 360. And in that model, I'm going to look at, let's just say orders, for example, orders coming in, and I can visually see where I have risks. So when that pulls up, I'm able to see where geospatially do I have risks, where are the issues, free goods as a percentage of sales. I can look at geospatially where I have risky transactions. And again, I'm looking at like 37 or $200 million, 51,000 orders, 20 distributors, et cetera. And where are those distributors, mainly in Africa and in Europe, as an example. But I can go in to look at I can go in and see my margins. And just by simply sorting by like highest margins to lowest margins, I can just click here, sort, and go through and see, right, show me my highest risk margins and scroll down the list. Why is it that my orders are 21 million, but I'm giving credits of 17 million, and go down that list? And so these, just by sorting from highest to lowest risk across a variety of algorithms, can be really helpful in terms of finding these improper payments. I can look at credit notes. I can look at sales orders. Again, it's all about why doesn't make sense to give, again, here's $4,000 in sales and $1,200 in credit. That's an awful lot of discounts. And these are the types of things that when you could just sort, you would be able to find those high risk transactions. Interestingly, when you think about the types of analytics that can be done, particularly around order to cash, again, I have procure to pay, vendors, order to cash as my distributors, I can see the libraries of tests that are available. And again, these can all be customizable around accounts receivable, et cetera. But being able to say, here's our free goods, distributor by outlier distributors, outlier products, credit notes focusing on percentage of volumes. There's all sorts of free of charge good, channel stuffing, anti-money laundering, third-party compliance, accounts receivable type tests. So there's all sorts of kind of tests that we could weight and risk score to then show me those highest risk transactions. So on the flip side too, I want to just briefly mention, when you look at vendors, because part of the issues they were also bribing during the procurement process, there was also issues going on. And when you look at understanding third-party payees, how do you know when the payments are going for? I think in the settlement, there was a $14,000 cash payment to a director in the radiology department that helped get them it was a $4.6 million contract. Where are you going to book that $14 million cash? That's probably going to be in the accounts payable section as a vendor. And when I can look at my vendor disbursements is it going to be booked as a miscellaneous expense? Is it going to be booked as a facilitation payment? What type of expense is it going to look at? I want to be able to see visually what are my highest risk transactions rolled up to the highest risk vendor, rolled up to the highest risk business unit, and then what transactions are they hitting on down here at the bottom. And again, this looks across the board. It looks at both invoices, payments, as well as the purchase orders tied together. And accountants call that the three-way match, to make sure everything is locked together and show me those items that aren't. This all helps identify potentially improper payments. And like I said, can be done for, again, on a hosted model, can be done for less than $10,000 a month. So these are the types of tools in reflection of Phillips. Nowadays, the technology is there to, I don't want to say easily, but easily spot these types of activities when compliance has access to the data. So let me pause there and we can continue the dialogue.
Sure, Vince. So you really gave us a great tactical deep dive into individual entries or business units that you could look at. Could I ask you to maybe look upwards, and can this tool give a broader or look at distributors in a geo region, distributors of a product, or literally distributors across the world to determine to set a standard by which a compliance officer would know if there's a true anomaly?
Yeah, I think when many companies have multiple ERP systems, there's only a few. And when I say ERP, that's an enterprise resource planning system. What is the financial accounting system of the company? And many companies have multiple ERP systems around the world. Sometimes the fortunately, there's some companies with one centralized ERP, and they've spent a lot of time to do that, or they use data warehouses to consolidate. That is gold for a compliance professional, especially or an internal audit professional, because the data is just right there for them. But many times that they'll have Africa has its own system, Asia Pac has their own system, and Europe has their own system. Now, fortunately, though, that used to be cost prohibitive. It used to cost me as a consultant $75,000 to $150,000 each to go and pull that data and centralize it into one central repository. Now it can be done for less than $25K per environment to bring it all together. And so when there are multiple data sources, I would say, look, you can bring them all together, or you can take a risk-based approach. Like in this example, as you're seeing in the dashboard, you're seeing most of my activities in Europe. So let's pull the Europe system. It's really taking that risk-based approach and documenting why you want to focus on those areas as part of your defense strategy, and it just makes sense. But the expectation is that you take a risk-based approach. You don't have to boil the ocean.
Vince, as you noted in your opening, the enforcement action also included references to internal control failures. It was not clear to me if these were control overrides or someone was basically not performing a second level review, that second set of eyes that is critical to any process, or not being utilized. Can the platform help on the internal control side of things so that that mechanism might pick up a problem?
Yeah, when one of the things that I was fortunate enough to do, and this just came out for those accountants, internal auditors, and those that worry about Sarbanes-Oxley, COSO just released their fraud risk management guide in March of this year. And fortunately, Kona AI was one of the co-authors. In fact, almost this very screenshot was used in the guidance on how we can risk score transactions. And when you think about segregation of duties, don't just show me a transaction that hit on one risk issue. Show me out of the 2.4 or the 2,124 payments, show me the transactions that hit on most of the tests and got a score of 38.3. The highest risk transaction or the highest risk payment out of all my payments hit on, it was potentially duplicate, it had third parties, it was paid to a sanctioned country, whatever those risks are. And that's the kind of transparency that we see. And when you see, obviously, those risks that have segregation of duties that are scored high, where they bypass controls, bypass approvals, etc., those will become apparent in your top 10 or top 20 list. And really, we found that to be the most effective way to identify issues. In fact, one of my customers just recently found like a $1.2 million expense for a conference that never existed. It showed up on the top 50 or so list of highest risk transactions because it hit multiple risk triggers, round dollar and one-time vendor, et cetera, and statistically anomalous. And lo and behold, the investigator looked at that, and again, was trained investigator, said, that looks suspicious. It's hitting on multiple triggers. Let's see if this event took place. And he just did a simple Google search on the internet. Couldn't find the event. Like, of course, an event a conference would be publicized on the internet, you'd think. Didn't find it. Lo and behold, it turned into an investigation. They're investigating it now, and they're interviewing the people who submitted the purchase order and the expense. But that's an example of just like who was looking at it and being able to surface high-risk transactions, whether that's a payment to a vendor or a sale to a third-party customer or distributor.
Vince, does this tool allow someone like myself who has legally trained and came to the CCO chair from the general counsel's office to understand really the bigger picture and to find anomalies and then turn it over to someone like you who can actually dive into the books and do the spade work to see if there is a problem that might need further investigation? Can that sort of work be done in tandem?
Yeah, I'd say I used to do that. It's funny. It's very hard to me. I was a consultant and a partner at EY for 10 years almost, and in the Big Four all my professional career. So I would love to get down into the dirty, do the investigation. But as a software company now and running a software company, I'm the technology, and I work with either the company or their retained counsel or service providers. In fact, we're just about to work. We've got a signed agreement with Kroll to be their analytics platform across the board and to help them out. But you would work with service providers like Kroll and others to do the review and the investigation. We just want to present the software, and the technology shows you where the smoke is, but only a trained forensic accountant or forensic investigator or legal professional or compliance professional can actually go and do the interviews and determine whether it's an improper payment or a fraud or corruption occurred.
So I'm going to turn your screen off because I have to follow up on your last statement, which was show us where the smoke is.
Yeah.
Can you explain the importance of that step and really what that means in an investigation and where it might move from that? That's just a great phrase to utilize.
Yeah, I like to set expectations with my customers, is that I don't care how great the analytics platform is, the analytics won't find fraud. The analytics tells you where to look for fraud and helps find the needle in the haystack, but ultimately you need to do the investigation. A human needs to do the investigation. One of the things I think that's really exciting and interesting is we are now using AI bots, and we're testing it and actually rolling it out on some of our test clients that want to look at this, but we're using ChatGPT and more generative AI to now interact with a bot that pushes the dashboard as opposed to you clicking the dashboard. So the bot moves Tableau or the bot moves Power BI, but still that's not a human. But the bot is now indexing the data without having to leave your environment. So it doesn't go to OpenAI, because again, that would freak everybody out. Data doesn't leave your environment. But being able to use a bot to interact with, show me my highest risk payments. Do I have any conflict of interest issues or risks in China between this date and this date? Ask it whatever you want. It will get you those answers. But then, and only then, does the investigator still need to go and look at the invoice or look at the payment, look at the detail, interview people, ultimately, and have a case management system, which actually we integrate into Kona, and determine whether it's fraud or not. But it won't determine it. Only a human can determine it. And what's cool, though, from a machine learning perspective, is once a human does determine it, that is when we can then train the model. In fact, if you could turn the screen on one last time, Tom, if you don't mind, what I want to show is this is how machine learning would work. Again, blue is good, green is bad, if I summarize it. But when the machine predicts not risky, and then a human looks at it and says not risky, that's 61%, that's good. But when the machine says not risky and it is risky, a human did a second review and determined that 5% is bad. We need to go fix that. So you would drill down and correct that, so the machine would get smarter. On the other side, if the machine predicts risky based on find more like this transactions, and it is risky, that's good. That's a hit, 24%. And then the not risky is a false positive. But again, we all know false positives. When the machine says, hey, this is fraud, but a human looks at it and goes, no, that's not a big deal. But when you can do that, and then on that 24%, really study a confirmed, when the model says it's risky and a human confirmed, what were the variables driving that risk? That's when you've got a very good machine learning model. In fact, if anybody's done e-discovery, which many of the audiences has, you've all heard about technology assisted review. You know about how that works. Find more like this with emails. It works really good on transactions as well. In fact, this concept called an F1 score here in data science, that is a measure of precision and recall. So the more you fix this model, so you get rid of that 5% there, and you get rid of the green, the 9.21% there, your F1 score goes up. And again, it'll never hit 100%. It's never going to be perfectly accurate, but the goal is to improve that model over time. And again, only humans can confirm it. So as you see here, the machine's not going to do everything. It's going to predict for you, but only a human, that actual value, that has to be a human tagging it. And that's a key point to remember.
All right. Vince, I've long wanted to do an episode with you where we could take an enforcement action and you could give us a real world examples of what a company can do in 2023, even if they couldn't in 2015. So I really appreciate you taking the time to visit with me, and I greatly look forward to continuing this conversation.
Thanks, Tom. It's always a pleasure.
This is Tom Fox again. I hope you've enjoyed this episode of the award-winning Data-Driven Compliance. For more information on Kona AI, you can go to their website, www.konaai.com. If you've enjoyed this podcast, I hope you'll subscribe, rate, and review wherever great podcasts are listened to. The award-winning Data-Driven Compliance is a production of the Compliance Podcast Network. Data-Driven Compliance will take next week off to celebrate the 4th of July, but we look forward to visiting with you the week of July 10th. Till then.